Good morning and welcome back to Almus Market Mornings, your daily dose of global financial updates. FOMC results will be out tomorrow, and let's quickly recap the economic situation building up in the US. Inflation has been coming down as per the recent prints, and unemployment situation has not worsened in a marked way. Markets continue to price rate cuts starting from May 24 onwards, and any shift in such expectations can lead to a movement in currencies. So Powell's commentary will be even more important today. But it's not just the Fed. Tomorrow we have the rate decisions from the Bank of England and the ECB as well. Good morning, JK. Action-packed day tomorrow. Break down your expectations with these meetings.
Good morning, Swaraj. Yes, before we go to what's ahead of us, yesterday's numbers, both from India and US, did not raise major concerns for the inflation watchers. In India, CPI particularly rose less than what the market was expecting, and the important thing was that core inflation also dropped to 4.11% from 4.23%. That was a good news. So from the policymakers' perspective, they can maintain the current policy. And of course, the Indian inflation is always subject to volatility because of the big swings that we see in the food prices. And last month's number was influenced by big rise in the onion prices. But going forward, there are a couple of things that we need to bear in mind. The next month's number can be higher due to base effect. At the same time, it may be offset by various measures that the government has taken to improve the supply side. So all in all, the CPI number is not so influence for the markets right now. Definitely not for the rupee. And IIP, a big beat on the number. And that was again helped by huge base effect advantage. We had seen a big drop in the industrial production last year, and that helped the numbers to be higher this year. So that's what the Indian macro data indicates, and overall rupee remains quite steady and almost stagnant. And that's what the central bank is ensuring. And there are now clear-cut indications that the central bank is active on both sides of buying as well as the selling side, which indicates that they want a stable currency and not to be influenced by volatility elsewhere, because the domestic economy is doing well, and the macro situation does not warrant further headwinds through a volatile rupee. But this may unlikely that this will continue for too long. And as we step into the new year, I expect more volatility, because a very close to a pegging of the currency is not good for a developed market. So I do expect, as we see more movement in the dollar index or higher flows into the Indian markets, we will see more volatility in the rupee. We may have to sit with less volatility as we move towards the end of this calendar year. On the US side, US inflation also came unexpectedly slightly higher for the month-on-month basis, and the fall in the gasoline prices was offset by increase in rentals. The report also indicates that the prices for used cars also went up last month. These were the two in the rentals and the used car inflations were the ones which were falling for the last 5 months, and then these have been seen higher. So it's similar to the unemployment report, where we did see a sudden spike in the number last month, drop in the unemployment rate. Is also the wages, and similarly inflation, which has been steadily dropping, has shown 1 month of rise. So whether it will be good enough for Fed to keep the same language of data dependency, that's something which is very much in the balance, because we have seen a series of soft numbers on the employment as well as in the inflation front. We will have some more evidence today when the PPI numbers are announced. So again, nothing conclusive as far as the Fed policy is concerned from the CPI. We also had some data from Eurozone, where the Germany investor morale, as per Zoo economic sentiment, improved quite a bit, and it came to 12.8 from 9.8 in November, beating expectations of the analysts. So this adds to the positive side of the numbers, because what we are getting from Eurozone is a mixed bag of data. Again, not conclusive. We will wait for more insights onto the economy and the policy implications when Lagarde speaks tomorrow after the policy meeting. Employment report in UK was significant in the sense that wages have fallen substantially on for the 3 months up to September, from 7.8 to 7.3. This is the biggest drop since November 2021. Of course, we do see some tightness in the labor market in UK, because employers are finding difficult to get enough skilled workers, particularly post Brexit. That problem is still continuing. But overall, I don't see Bank of England's strong stance of pushing against the market's expectation of a rate cut, definitely, and that we maintain. If I had to look at all the 3 meetings that are lined up from today, tomorrow, I think the Bank of England is going to be the most hawkish, in the sense they are, I would say, least dovish, and possibly Fed and ECB will slightly lower their hawkish stance, and definitely ECB, I think, because their inflation fall has been quite severe, and we are seeing the natural gas prices falling substantially in the last 1 month, which means that they're going forward also. Their inflation number is going to be quite low. And for an economy that is already seeing Germany and France into contraction, I think the ECB would be expected to cut earlier than Fed, if we have to go by the numbers. As far as we also had some good news from Japan, where business confidence of big manufacturers hit a 2-year high, and this is adding to a series of good news that we are seeing on the Japanese economy. And yes, inflation has been much higher than Japanese central bank target, but they have held off any change in the policy. There have been conflicting statements from Japanese officials about wanting to change the policy. Sometime back, they said they are assessing the impact, if any, of the change in the policy. And then again, they said right now it's time not ripe for changing the policy. I think we should have a clear indication, some more clear indication when they announce their views on 19th of this month, that is next week, when they meet for a policy meeting. So we are heading into major policy meeting. In fact, Swiss National Bank is also likely to give their views on the monetary policy and Swiss franc, which they have been defending for a long time, when they meet this week. So central banks are on the watch. Whether the year ends with any major shift in market expectations, or central bankers' future guidance, is what we'll be looking forward to. We may not see too much of a reaction in the markets because we are already heading into thin liquidity. Definitely from next week onwards, we don't see much participation, but definitely these events are going to be the final input for the market to react either way. So my bias would be underlying weakness for the dollar, but the short-term data will keep it volatile for some more time, or at least till the end of this calendar year. Yeah, good news for inflation watchers has been another sizable drop in the crude oil. The trend of falling crude prices has continued, as concerns about demand persist, and output cuts they have announced so far has not been sufficient to support the prices. So we are seeing the crucial test of 70 lined up for Brent, and I feel that's going to be a very good support for Brent prices, or any attempt to breach there would invite more action from the OPEC plus countries. So waiting for action-packed 2 days, as you mentioned, and let's see if it ignites any movement in the INR as well. Thank you.
Thank you, JK. And whether the action-packed 2 days will ignite any action in the rupee is something I think all market participants are actually wondering. And speaking of rupee, yesterday Indian CPI numbers were out, and the CPI rose less than expected, but core inflation dropped to 4.11% from 4.23%. We also had the US inflation data, which came slightly higher on a month-on-month basis. Rentals offset the fall in energy prices, and prices of used cars went up last month. Now, one important thing to note is these both elements were falling for the last few months. Now, whether Fed will maintain the data dependence approach is a key thing which markets will be looking out for. And out of the three central bank meetings, BOE is expected to be the least dovish, given the the least dovish, and given the economic situation in France and Germany, bets on the first cut next year is on the ECB. But all of these are market expectations which change pretty quickly. That's it from us today. Thanks for listening. Tune in tomorrow for the latest in the financial markets.